Welcome back to another episode. Today we're going to take a quick look at two companies that are reporting earnings this week and that I'm super excited about. The first company we're going to take a quick look at is Unity. The second one we're going to take a quick look at is AMD. Both of these are tier 1 stocks in my portfolio, and today's episode we're going to take a quick look at revenue expectations, a quick update of what's happened to each of these companies in the past few months, and just my overall thoughts. But before we go there, we can see it is a pretty good day in the market right now, especially for some of these growth stocks, right? Unity is up about 9.5% as I am recording this episode, and AMD is up about 6.3%. I do want to say, right, emotions are probably the worst enemy during in investing. And emotions work both ways, in both the downturn and in the uptrend. In the downturn, we kind of have that kind of panic selling mood, and in the uptrend, we can have that panic buying mood, which can also be some form of destructive method in the overall portfolio. So I want to say, if you have a plan, make sure to follow it with both during the downturn and during an upturn as well. But enough with that. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for free Discord, free newsletter, and a lot of great investing links. So let's just jump into Unity. They are expected to release their Q4 earnings on February 3rd after the market close, so that it is this upcoming Thursday. Analysts expect revenue to be somewhere between $295.7 million, and that would be up about 35% year over year. If we take a quick look at previous earnings, in Q3 they grew 42%, in Q2 they grew 49%, and in Q1 they grew 41%. They actually did beat analyst expectations each of those quarters as well. So we can see Unity is still expected to grow at a nice healthy pace. I believe if they meet expectation, 35% is still pretty strong. I do want to say one thing. We can see Q2 to Q3 to Q4, if they kind of meet expectations, the revenue jumps are not as high anymore. Just something to keep in mind of. The great thing is this is a software company, and normally what you expect to see is revenue continue to increase on a quarterly basis. Now, if we take a quick look at some recent news for Unity, on November 17th, they did announce a $1.5 billion offering of convertible notes. I just want to show, I'm not too worried about this offering, especially at the end of Q3. They did have a strong balance sheet of about $1.2 billion in cash and short-term investments and about $0 in debt. They are going to be using, I think it's a great time to build up cash right now and lock in some great rates. At the same time, I also do believe that they're using a lot of this money for acquisitions and accelerating their growth outside of the gaming market. Let's take a listen to today's sponsor. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me scout out new growth stocks. And right now I have a discount for one of my favorite services The Fool offers. Through the Motley Fool Stock Advisor services, you get access to a ton of expert stock picks. Every month you'll get 2 new picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have done amazing returns. If growing your money is something you'd like to do more of this year, you can visit fool.com/Jose Najarro or click on the link below for access to my special offer and decide if the Stock Advisor is right for you. Thanks again to the Motley Fool, and now onto today's video. In December 1st, they did complete their Weta acquisition. For those not familiar, Weta was that VFX studio that's worked with things like Lord of the Rings, Avatar, and some crazy movies. On December 16th, Unity adds social platforms to its ad bidding services. Remember, Unity also has kind of an advertising segment, which continues to do well. And then January 24th, this is a recent one that I don't believe gets talked about enough, but Unity acquires Siva Dynamics, which is a leader in sophisticated simulation. So this is going to help Unity grow in the real-time 3D content market. But at the same time, they also do have a tech purchase within this, I want to say. Weta, remember, has their own tools. And to be able to integrate Weta's tools to Unity is a very difficult task. Siva Dynamics has kind of created some form of bridge that allows these kinds of tools to kind of meet. So Unity actually ended up purchasing, obviously, to improve their real-time 3D content. But because Siva already has kind of this bridge, it will help them accelerate the integration between Weta and Unity, which I think it's a great move. We saw today price movements for Unity has been pretty strong, but if we take a closer look at the past year, it's definitely seen better days, right? Unity is down a nice amount from its all-time highs. Now I just want to share my overall thoughts. I do own shares of Unity, and this is a tier 1 stock in my portfolio. This is a company that for me, I don't worry about it on a quarterly basis. I think the growth this company needs is, who knows, maybe one quarter might be bad. I believe the real thesis will be shown in multiple years. I am bullish on the gaming aspect, which currently makes most of Unity's total revenue, especially as mobile gaming continues to grow. Again, I'm also bullish on the real-time 3D content as autonomous technology continues to be developed, and the ability to train them at a cheaper and safer price is a must, and that's one of the market's real-time 3D content hits. The acquisitions that they made, Weta, Civil Dynamics, make perfect sense as for Unity, as they want to increase its market in animation, in real-time 3D, and also increase the tools in game development. Unity is going to maintain to be one of the leaders in this game engine. I do want to say, obviously, there are risks in Unity. First, valuation. It is a lot less now, but obviously this is a high growth stock, which is going to come with high volatility. Another risk I do want to say is investors might be expecting too much in the short term. I feel sometimes investors want unlimited growth in the first year or the first few quarters. But like I mentioned, this is one that I don't care about it on a quarterly basis. I'm more worried about a yearly growth from here. The other thing is a risk of slow accelerating outside the gaming market. Remember, they're going into the animation. They're going into manufacturing, into machine learning, simulations. If that growth is slowing down, investors might see that as a bearish sentiment. So those are some of the risks for me. Tier 1 stock, I really do believe this is a nice dollar cost averaging opportunity for Unity. The second company I want to take a quick look at is AMD, another tier 1 stock in my portfolio. Quarter 4 earnings are scheduled for February 1st after the market closes, so that is tomorrow. They expect the revenue about $4.52 billion, and this is analyst expectations on average, with about 39% year-over-year growth. If we take a quick look, quarter 3, they grew 54%, quarter 2, they grew 99%, and quarter 1, they grew 93%. And all past 3 quarters, they did beat analyst expectations. Something to keep in mind of, right? I am very bullish in the revenue, especially as we continue to see strong growth in the data center market from all these other kind of semiconductor companies that have announced in the past. They do expect earnings per share, analysts expect earnings per share to be about 76 cents. Some recent news, AMD has had a lot of articles in the past few months about their 3rd generation EPYC, which is their data center processor, continues to be adopted by top cloud players. And this is great news. I'm pretty sure if you look at their investors note, you will find at least 4 to 5 different articles relating with this. On November 8th, they released the M1200, which is supposed to be a high-performance computing GPU. I personally haven't seen too much adoption in it at the moment, but it's impressive to see how they continue to develop into these accelerating markets. On January 4th, they did announce at CES numerous new laptops, numerous new graphic solutions for discrete, also for laptops and for integrated. So I think those are great news. They also did announce their upcoming Zen 3 Plus and their future release of Zen 4, which are their CPU processors. On January 19th, they did release new graphics cards that hit the market. These graphics cards are entry-level and workstations. And on late January, they did announce that the Xilinx acquisition has been approved by Chinese regulators and is expected to close by quarter 1 of 2022. Price movement, AMD is up a nice amount again today, but still, we can see it's crazily down from its all-time highs. To me, again, another nice dollar cost averaging opportunity. Now, my overall thoughts. AMD, their EPYC, their server processor, continues to do well, and I don't believe this is going to stop. The company continues to meet roadmaps and continues to innovate in the CPU market, in the GPU market, and now with Xilinx in the upcoming FPGA market. Gaming market is still also pretty strong. The PS5 is still in high demand, so is the Xbox One, and now the new Steam Valve system, which is a handheld gaming system, is expected to be released, I believe, in February. The GPU market still in very much high demand. I personally can't go out there and buy a graphics card anywhere near average price. So that's pretty impressive for the GPU market. It sucks for gamers, but really good for companies like AMD. And they are working in numerous emerging technologies. Well, their technology is used in numerous emerging technologies. Their GPUs are used in AI for data centers, AI for healthcare, for cybersecurity, machine learning, artificial intelligence, autonomous, automation, and the list goes on and on. There are obviously risks with this company's valuation, obviously a lot less now, highly volatile, very similar. I do believe investors might be expecting too much in the short term. This is a company I'm not going to worry about on a quarterly basis. They do have high competition though. The semiconductor is very, very cutthroat. I do believe the semiconductor cyclicality is also some form of risk. I don't believe it's as big as a risk as it was in the past, but something to note of. Finally, supply chains, right? This is a company that there's no real room for error. If there's a mistake with one of their products, if supply chain issues start to arise, it can really hit this company's overall revenue because their providers or their manufacturers are pretty much working at full capacity. So that's it. I hope you guys enjoy these two companies. I hope you guys enjoy the presentation. Take care, have a good day, and see you next time.